There is a lot of misunderstanding and perhaps a lack of appreciation of what Hong Kong really is as a market in its own right. The debate for some time has been predominantly focused on China and the growth of China and the opportunity in China. The reality is that China remains still a pretty tough country. Certainly there is a demand for exports, certainly there's a demand for services, but compliance, regulatory obligations, actually getting money out of China, just processing payments and invoices, is still somewhat more challenging than a lot of people understand. In Hong Kong, it is different. This is the absolute key point to what we are trying to do through these seminars, is to make the case that Hong Kong is very, very different. For all the reasons that Steve has outlined, that it is an English-speaking economy, that it does have a common law system of judiciary, which means that you understand the systems, which means that your contracts are recognised, very familiar to what you would be used to here in New Zealand, and that its business culture is Western and focused on international opportunities. You're operating in a secure and safe environment. But let's go down to some of the specific opportunities. And I don't want to get into the position of quoting ad nauseum on statistics, but there's a little bit of realism to this, and there's a reason why the growth in these particular sectors, which make up 60 to 65% of Hong Kong economy, is as it is. And one aspect about Hong Kong that is not discussed as often as it should be is that Chinese companies are coming to Hong Kong for very similar reasons that you are going to Hong Kong. Because of the restrictions in the mainland with information, with capital and with the delivery of services, those smart Chinese companies, those Chinese companies themselves that want to get more internationally capable, are coming to Hong Kong to get their services, to re-engineer their businesses, to raise their capital, to get their expertise, to change their management, to change their culture, so that those companies can then go offshore. And we're seeing some really strong cases that international companies that are operating from the mainland are not investing internationally from the mainland, but they're doing it through their Hong Kong company. And they're buying their telcos, they're buying their ICT, they're getting their administrative and some support services. And they're doing it because the demand's there, the expertise is there, because it's English speaking, because it's a common law jurisdiction, because contracts are honoured, and the service can be delivered without the restrictions that exist in the mainland. And this is a very, very strong case. I've deliberately put down there with tourism, convention and exhibition services because it takes up Steve's point very aptly. We're now seeing international tourism and destination marketing bodies coming to Hong Kong, setting up their offices, promoting their destinations, promoting their countries, promoting their experiences, because as it's been pointed out, the wealthy, educated, highly desirous Chinese consumer that wants to go and visit elsewhere has come to Hong Kong first. Because the first place the Chinese people can visit as an international destination is Hong Kong. And with 28 million of them last year, and around about 30 million of them this year, if you yourselves could get access to 30 million wealthy, affluent, informed and capable Chinese tourists in one city, it certainly seems to be a reasonable opportunity to me. To give a further indication on where the economy is, the government has invested an enormous amount of money in infrastructure, and this shows where Hong Kong is with its thinking, with its long-term planning and with its health. Now, a lot of the capacity for these investments are not being directly delivered through Hong Kong companies or through mainland companies. A lot of the design services, a lot of the supply contracts, a lot of the component manufacturers are actually international companies. Some of them, sadly, are Australian companies. There's a couple of New Zealand design companies that are doing some work in the public infrastructure space. But as your minister outlined, that New Zealand has a very interesting capability in infrastructure. And by virtue of this opportunity, by these 10 large infrastructure projects, US $8 billion to be invested over the next financial year, again, it sort of makes case, well, we need to have a look at this. You don't need to be a huge company. You don't need to be a huge supplier. A lot of these companies are subcontracting or subcontracting opportunities, supplying to the large companies that have already got the design and the construction contracts themselves. And we get this feedback from the big Chinese developers and also the international developers that they're very pleased and they're very prepared to talk to the small suppliers so they can engage on a subcontracting supply basis. But this is just what the government's doing. The private sector itself is investing equal, if not more, in its own developments. This is a very important point to make. Because of these visitors coming from the mainland, they're spending. They are buying products in Hong Kong that otherwise would not necessarily be available in the mainland. And they are buying these products in Hong Kong because other international products that go into the mainland are subject to tariffs, are subject to quotas, are subject to VAT at 17%, which makes those imported products, ironically, more expensive than what they are in Hong Kong. No GST, no tariffs, no quotas. Anything that you produce in New Zealand, not just by virtue of what Hong Kong's economy allows, but by virtue of your own agreement, can end up on a shelf in Hong Kong with only the additional freight charges. This is a pretty good opportunity. And another aspect is one of the reasons why the Chinese consumers are buying these products in Hong Kong is because they're guaranteed of the quality, because of the legal framework, they're guaranteed the authenticity. And one thing that I think Australia is quite envious about in the New Zealand context is that the pure New Zealand brand, this clean and green opinion of New Zealand really has some prominence. So your food, your wine, your beverages, your consumer products, this is what the Chinese consumer wants when they visit. And just to show you a little bit more about that, this is where the visitors are going. We've had nearly 15.5% increase this year. 2020 there will be 57 million visitors to Hong Kong. Probably about 35 million of them will still be mainlanders. The market is quite substantial. This is one thing that I find quite remarkable insofar as these consumer trends. You would notice that in the developed economies and the overnight spend, a lot of that will be taken up through hotels. Us, we tend to be a little bit more choosy as travellers. We want to stay in nice hotels. We want the nice experience that that comes with. Chinese aren't interested in that. They want to shop. They want to eat. They want to enjoy themselves. They will spend almost 3 times on shopping than Western tourists. Do a rough calculation. That's 6,000 New Zealand is 6,000 Hong Kong, I should say, is almost 1,000 New Zealand dollars. So with 28 million Chinese tourists coming to Hong Kong last year, every single one of them spending nearly 1,000 New Zealand dollars a day, that's a pretty compelling case. But there's another aspect to this which we forget, is that this is a pretty good marketing opportunity. A number of the New Zealand companies, a number of the international companies are realising that the mainlanders are coming and they're getting their familiarity of these products in Hong Kong. They're getting to understand the products a bit better. They're getting to appreciate the quality of the products a bit better. And you don't need to be spending enormous amounts developing the relationships and looking at the marketing opportunities in the mainland because you've already got that in existence in Hong Kong. So for Chinese consumers coming out and seeing your products and seeing your delivery, then they understand exactly in its authenticity and also in its quality what that means. Companies such as Comvita has got that in spades. A little coffee shop out of Wellington called Fuel Espresso has now got probably the best 2 coffee shops in Hong Kong, one at the IFC and one at the Landmark building. And for all my colleagues who tell me that the queue at the Landmark building every single morning can take half an hour to get a New Zealand coffee, the owner of that shop would like to open another 6. The problem we have is we can't find space for it. But this is a pretty important point, that in the F&B space, in the consumer goods space, the Chinese market will come to you in Hong Kong rather than you necessarily having to go to the mainland to follow it. The 6 emerging industries which Steve did touch on is where there's not a whole lot of capacity in Hong Kong at the moment. and this is a bit of a challenge. The government has directly identified these industries as where international companies really can fulfill a niche and fill a demand. And this year is 2012 year of creative industries in Hong Kong. Hong Kong wants to position itself as the place that comes up with ideas. It wants to come up with the ideas that can then use its links to the mainland to develop, manufacture and produce those ideas. Because if you come up with an idea in Hong Kong, you know that your IP is going to be protected, you know that you're going to have your trademarks and all of your regulations with the IP registered and identified, and you can manage it under Hong Kong law and under Hong Kong tax law a lot more effectively than you could do in the mainland. But the creativity is not there, the capacity is not there. This is only still not even 10% of the economy, and the government has identified this directly as being one aspect that really needs to be developed. A $100 million fund to support the Hong Kong Design Centre in industrial design, clothing design, jewellery design, every aspect of design. Those funds, those grants are available to every single company. A great aspect about Hong Kong is that when you set up in Hong Kong, you are classified as a Hong Kong company. There is no distinguish between yourselves being a New Zealand-owned company or a Hong Kong company. Anyone who develops private hospitals, we've got 4 sites at the moment. I'm sure there's quite a few of you in the room. Please talk to us about that. In professional and continuing education, in accounting, in a legal and management consulting sense, again, Hong Kong's been very good at developing its economy, but it's not been very good at reinvesting in its economy. The point that we need to make here is that professional standards have moved into an Asian standard. There is a standard now where Asian economies themselves want to have their own certification, have their own standards, and ensure that they have worldwide recognition. New Zealand as an international economy, as one that operates very successful with these type of programs, there is good opportunities there. Innovation and technology, again, the government is there to help. We have the Hong Kong Science and Technology Park, we have the Hong Kong Cyberport, we have the Small Enterprise Research Assistance Program. The government has funding available, has grants available to assist research companies that are coming to Hong Kong to further develop their product. The key focus to this is products that have that mainland attraction. So design, technological development, innovation, multimedia, film, those industries, funding is available and the government certainly wants to talk to you about. In environmental industries, I can't overstate the clean and green and the technological capabilities of some of your environmental industries. It is very much in demand, and I'm sure that Sharon May will talk more about that. And testing certification, more on the Chinese companies coming out and getting their international capabilities to then, of course, go into international themselves. But looking particularly on food and jewellery and construction materials, Hong Kong is trying to position itself as a hub for these type of industries. I just simply put this slide up here because Hong Kong wants to make it easy for you. We don't want you to pay a whole lot of tax. Only 10% of companies pay tax. In the mainland, it's a different situation. The government's attitude is very much on the basis of we want you to do what you do best, and that's run your business. And if you run your business and you're employing Hong Kong people and you're developing your market in Hong Kong, then we're not going to be burdening you with compliance, with red tape, and of course with taxation. So we just put that up purely on the basis of letting you know what the reality is. Singapore, they might have a different attitude, but that is the reality with Singapore. It is a higher taxing economy than Hong Kong. Just to conclude, if you want to set up a company in Hong Kong, and our role in Invest Hong Kong is to assist you. We provide a free service. We don't charge. All that we have to offer is advice and assistance, but you can set up a Hong Kong company in 24 hours and it will cost you about $300 New Zealand dollars. And it is your company. You don't need local shareholders. You don't need local directors. It is still treated as a Hong Kong company, and we, for the most part, want you to run your business, as I said, without any further regulation. So we understand small companies starting off, we understand developing an export market, we understand that setting up a company in Hong Kong might not necessarily be for everyone, and we understand that sometimes going to China is more suitable for some industries. We work very closely with Sharon May and New Zealand Trade and Enterprise. We are just part of that solution to help you with the advice and hopefully build a case where your business can be successful. If you'd like any further information, our website is here. My colleague Ian Robards' details is there. Ian would love to hear from you. I would love to hear from you, and I very much look forward to speaking to you at the